Hello friends. Friends, we'll continue with dissolution, right? Dissolution of partnership firm, right? This is what we started in the last lecture, dissolution of partnership firm. And I told you what is dissolution. Dissolution is closing down partnership business, right? And I told you that in the process of closing down, what is the first step we do is we sell our assets, right? What is dissolution? I told you a short story in which I said that we move from a rented accommodation to our own fully furnished house. So whatever the assets you have in the rented accommodation, now you don't need those assets. So what will you do is you will sell those assets, isn't it? Now you don't need the assets that you had in the rented accommodation because your new accommodation is fully furnished with the assets. So what is the first thing that will come to your mind related to those assets is sell those assets and realize the money. Clear? So now in this lecture what we are going to start is the accounting treatment of dissolution of firm. Clear? Accounting treatment of dissolution of firm, partnership firm. Clear? So now in this, the first thing we are going to do is if we sell assets, we realize money. So we will prepare realization account. If we are selling the money, we are realizing the money. So the first step is we have to prepare realization account. Clear? So this realization account will deal with two things. One is assets and one is liabilities. From assets, we will realize the money and we will use that money to pay off the liabilities. Clear? Section 48 says, whatever the money you receive from the sale of assets, we have to apply that money towards paying the liabilities. Paying which liabilities? Outsider liabilities first, then partners loan, then partners capital accounts. And then if there is anything left, then that will be shared by partners in their profit sharing ratio. Remember? So the first thing is we'll talk about assets. So first thing we'll talk about is assets. Now if you are selling assets, if you are going to sell the assets, what will be the journal entry for this? If you are selling the assets, your assets will be credited, right? And what will be debited is if you are preparing the realization account, so the entry will be realization account debit to assets account. Is it clear? Remember, we have done the revaluation of assets. In that case, we say we prepare revaluation account. And when there is a fall in the value of an asset, the entry is revaluation to asset. Here we are selling the whole asset. So our entry will be realization account debit to assets account. We are realizing what? If you sell the asset, you will realize the cash. So what is the entry? Cash to assets. But here we are naming it as realization account debit to assets account. Clear, friends? Right? Now we have some important points to be kept in mind relating to assets. points to be kept in mind related to assets, right? Number 1, cash and bank balance. Cash and bank balances are not transferred to realization account. Why? Because only those assets will be transferred to realization accounts which can be sold and from which we can realize money. Cash and bank balances are already in the liquid form. We are not going to sell them, isn't it? So what is included in the asset is land, building, plant and machinery, goodwill, stock, debtors. So these things will be included in assets. Cash and bank balances will not be transferred to realization account. Right? Second point. If there is any provision related to assets, if there is any provision related to assets appearing in the books, then that provision will also be transferred to realization account. Clear? For example, in the balance sheet, you have debtors of 1 lakh, right? And you have provision for doubtful debts 10,000. Net debtors appearing in the balance sheet are 90,000. Clear? So he says, if there is any provision related to assets, this provision for doubtful debt is related to asset, that is debtors, then that provision will also be transferred to which account? Realization account. Clear? So what will be the journal entry? First is the sale of asset, that will say realization account debit to debtors account. The actual debtors amount is 1 lakh. So we'll transfer 1 lakh to realization account, and the other entry will be provision for, because this provision is what? Liability. This provision is shown on the liability side. This is provision for doubtful debts account debit to realization account, that is 10,000. Clear, friends? So what is this point? It says that if there is any provision related to assets appearing in the books, then that provision will also be transferred to realization account. Clear? Third point. Third point says, if there are any fictitious assets, appearing in the books, these will not be transferred to realization account, right? Because these cannot be sold and no money is realized from these assets, right? So if you have any fictitious assets appearing in the balance sheet, then those fictitious assets are not to be transferred to the realization account. Now, what are the fictitious assets? What can be the fictitious assets which are not actually our assets, like accumulated losses, like advertisement, expenditure? Clear? So if you have any fictitious assets appearing in the balance sheet, then those will not be transferred to the realization account, right? Then what is the treatment? I'll say fictitious assets. We have to finish off these fictitious assets, right? We are closing the firm. We have to close the balance sheet, right? So these fictitious assets will be transferred. These fictitious assets will be transferred to partners' capital accounts, right? So we'll transfer these assets to partners' capital accounts in their profit sharing ratio. So what will be the journal entry for that? If you are reducing the assets, you will credit the asset and you will debit the partners. You will say partners capital account debit to fictitious assets account. Clear, friends? So these are the few points that are important to be kept in mind. The first was that cash and bank balances are not to be transferred to realization account. The second is if there is any provision related to assets appearing in the books, like provision for debtors, then that provision will also be transferred to realization account, right? This is how the journal entry will be passed. Clear? Then the third point is if there is any fictitious asset appearing in the books, fictitious asset means accumulated losses, advertisement expenditure. If these type of assets are appearing in the books, these will not be transferred to realization because there is no actual money realized from these assets. These are just the fictitious assets. These are not our actual assets which can be sold in the market and money can be realized from them. These are not actual assets. These are just fictitious assets. Clear? So how to treat this fictitious asset? These fictitious assets will be transferred to partners' capital accounts in their profit sharing ratio. Clear, friends? Now, this is all about assets, right? If we talk of realization account, in this I told you we'll talk about assets and we will talk about liabilities. So the asset is we have sold the assets and we have realized the amount, so we transfer that amount to realization account. We say realization account debit to asset account, and we have discussed the few points that are important to be kept in mind while dealing with assets. Clear? Now let's take up liabilities. Let's take up liabilities. What is to be done with the liabilities? The money that you have realized from the sale of the assets, right? Now from that money you have to pay your liabilities. You have to pay the amount that is due. So section 48, if you remember, we have done in the last lecture, gives you the order in which the liabilities are to be paid. Right? It says the first right on that money is of the outsiders. Right? The first people who are to be paid out of the money realized from asset are the outside liabilities, and the realization account also deals with only the liabilities related to outsiders. Right? Make a note. Only outsiders' liabilities will be transferred to realization account. So what will be the journal entry for that? If you are paying off the liability, what is your journal entry? You will debit the liability. You will say outsiders liability account debit to realization account. Clear, friends? Isn't it? So this is the realization entry relating to liabilities, right? Now what are the outsiders liabilities? It can be sundry creditors. What type of outsider liabilities can be there in the balance sheet? This can be sundry creditors, right? This can be bills payable, right? This can be loan from bank, right? This can be loan from third parties. So these kind of outside liabilities we have to pay off, and these will be transferred to realization account. Clear? Clear, friends? For that, the journal entry will be outsiders liabilities account debit to realization account. Now what is not transferred to realization account is partners loan and partners capitals. These are not transferred to realization account. Clear, friends? So in case of liabilities, we only deal with the outside liabilities in the realization account. Partners loan is also a liability for the business. Partners capital is also a liability for the business, because what we say is the partners are separate entity and the partnership firm is a separate entity. So the partners capital is the liability for the business. Partners loan is also a liability for the business. But section 48 of Indian Partnership Act 1932 says that out of the money that you have received by selling the assets, first of all, outsiders liabilities are to be paid. So that is what we are going to take in realization account. Only the outsiders liabilities will be considered in realization account. The partners loan and partners capitals are not transferred to realization account, right? For this, for partners loan, we will prepare partners loan account, and for partners capitals, we will prepare partners capital accounts. Clear, friends? Right? So this is how we deal with assets and liabilities in case of realization. We prepare a realization account. If we talk of assets, we are selling the assets and realizing the money. So the journal entry will be realization to assets And then we discussed some of the points to be kept in mind while relating to assets, that cash and bank balances are not to be transferred. If there is any provision relating to the assets, like provision for doubtful debts relating to an asset, that is debtors, then that provision will also be transferred to realization account. Clear? Then if there are any fictitious assets appearing in the books, these will not be transferred to realization account, because these are not the actual assets which can be sold in the market and money can be realized from them. These are not actual assets. These fictitious assets will be transferred to partners' capital accounts. Clear? Then talking of liabilities, we say that only the outsiders' liabilities will be transferred to realization account. Section 48 Indian Partnership Act 1932 states that out of the money that you have realized from the sale of the assets, the first right is of the outsiders. First you have to settle the outsiders' liabilities, then you can pay the partners' loan and partners' capitals. So in case of realization, we will only deal with the outsiders' liabilities, which can be sundry creditors, bills payable, loan from bank, loan from third parties. Partners' loan and partners' capitals are not transferred to realization account. Clear? So this is a small part of what I can say is assets and liabilities related to realization. Clear? So this is the basic of assets and liabilities relating to realization. I hope this much is clear to you. If you have any queries, just send me an email at ksjteaching@gmail.com. Right? In the next lecture, what we are going to do is, we are going to talk about a specific liability, how to deal with that specific liability. So I'm going to talk about workmen compensation reserve. You might say that, sir, we have discussed this in the last 3 chapters also, that is change in profit sharing ratio, admission and retirement. Yes, we have discussed there also, but in case of dissolution we have a little bit of a different treatment of workmen compensation reserve, right? A little difference. So in the next lecture, we are going to discuss about the workmen compensation reserve. I hope this much is clear to you, friends, right? So that's all for this lecture. Thank you so much.